Well, good afternoon. You're listening to the new WCEG Network on WCEGTalkRadio.com. Click your live stream tab or watch us live on your smart TV, YouTube, WCEG Network. I'm Celeste Giordano, your show host, and this is the Global Legacy and Wealth Building for the next hour. And I'm excited to have my guest here today, Sara Poe with Poe's Accounting Services. And it's where we speak life into the community. Like us on Facebook, follow us on Twitter and on Instagram at WCEG_talk_radio and at WCEG Network. We're also on Roku TV, Apple TV. Just look for the WCEG Network. And last but not least, our disclaimer. The topics and opinions are those of the show host and guest and not WCEG Network. Thank you for your continued support. And I would just like to say Happy New Year to everyone and excited to be here, excited to kick off the year, our 5th season with Sara Poe as our guest here today. Also would like to thank Penny Rogers with WCEG Network and their board of directors for this opportunity and this platform to speak life into the community. This is a very exciting time for us. We got a new year. It's a new us. We got a clean slate, Sara. And I ended our last season in November with you about what everybody needed to do to get ready for the end of the year for their taxes for this year. And we're starting our 5th season here today with you because people are all ready to get their taxes together. And I just thought what a great opportunity to bring you back on January so we could let everybody know what they need to do to be prepared to go see their CPA, accountant, bookkeeper, tax person. So we are excited to have you today. How was your holidays?
It was fun. It was fun. Got caught in some snow, but it was fun.
I know. I never laughed so hard talking to you this morning and telling me about your trip to taking your grandchildren and children and going to skiing and the episode with the snow and everything. And just praise the Lord, you're safe in your home. I don't think you're going skiing anytime soon, are you?
No, no, no. I told them if they ever want to go skiing, they need to get on an airplane and go or go up to Boone, North Carolina.
There you go. Well, you're creating a lot of cherished memories with your families doing those things, and that's so important to do that, Sara. So I admire you that you put on your big girl panties and you went up into the snow, even though you didn't ski, but you watched them and you supported them, and you had a lot of laughs and a lot of quality time, and that's what's important, right?
That's right. Making those memories with them.
Absolutely. They grow up so fast. That's for
Oh,
sure.
yes. Yes, they do.
Absolutely. Well, Sara, we have quite a bit of things to talk about here today because I know there's a lot of changes. There's been a lot of things that have gone one way, and then the IRS has said no, and then the IRS said yes. So it's like one foot on the brake, one foot on the gas. So we're going to get all those questions answered. But what I'd like to do is I'd love to read your bio for our audience and listeners. And if for those of you that are listening today, if you have any questions, if you just type it into the chat, Sara and I will be glad to answer those questions for you. And so just go ahead and put it in the chat right there, and we will have those questions for you and we will answer them. So Sara is a certified public accountant, and she has founded Poe's Accounting Services to help clients understand and navigate their finances. With a natural aptitude for managing numbers, Sara simplifies her clients' financials and taxes, taking unnecessary anxiety and confusion out of the accounting process. Working with individuals, families, business owners in the Lawrenceville, Dacula, and Brazelton area, Sara helps her clients take a step back and view the bigger picture of their financial standing. With a broad understanding of the issues, she then narrows in on the fine details to address and implement efficient systems. With nearly 30 years of industry experience, Sara has earned a reputation as a trusted accountant service provider, known for her warmth, honesty, and attention to detail. She builds lasting relationships with each client and serves them accordingly to their unique needs. As a business owner, Sarah appreciates and relates to the many responsibilities and demands her clients face on a day-to-day basis. An authority in the field of accounting, she is dedicated to helping local businesses owners succeed. Sarah is equally passionate about helping individuals and families understand their finances, monitor their spending, and navigate tax season with greater peace of mind. Prior to launching her own business, Sarah worked for companies such as Viasat, All Weather Heating and Air, Pacific Company, and Pose Construction and Development. A graduate from Georgia State University with a degree in accounting, she launched Pose Accounting in 2009. When Sarah isn't balancing budgets and filing taxes, she enjoys spending time with her children and her 3 grandchildren, who she spoils often, excuse me. A little known fact about Sarah: as a child, she dreamed of becoming a rockette. Today, she settles for high-kicking clients, balance sheets into shape, committed to giving back to the community, is involved in the church, and volunteers at the Women of Community Impact. So with that being said, Sarah, phew, that's quite a bit. You have really come a long, long ways. This bio speaks much volume for you, but I remember when I met you, and I believe it was 2012 or 2013. It's been 11, 12 years ago. And how you have taken your business from then to where you have taken it now is just phenomenal. You've done a phenomenal job. Very, very proud of you, my friend.
Well, thank you. I've had a lot of good support along the way, like you, Celeste.
Absolutely. Appreciate that. And, I just love the fact that, you give back to the community, you help people in need constantly. You're very active in your church and community. Very grateful for you, as well as Lynn Chapman being the co-founders of the Women of Community Impact. We're starting, what, our 4th year, or is it our 5th year this year? I'm not sure.
Fifth year.
Yes, with
Yeah.
community impact, and we do so much good in the community for that. And it takes a village to do things like that in the community, as well as serving business entrepreneurs and growing your own business and taking care of your family at the same time.
You're absolutely right. It does take a village.
It really does. So, anyways, anything new with you that you want to share with our audience before we get started here today?
Um, just just getting my mind mentally prepared for what's getting ready to come up this tax season.
Yeah.
It's a mental thing as much as it is as a physical thing, but I enjoy it. It's always a learning experience. Every tax season I come out and go, okay, this is what I need to learn or focus on this summer and for my CPEs. But I've been blessed to be able to do that every year.
Absolutely. And we have all shapes and sizes that I'm sure that come to your office, for help during tax season and throughout the whole year. But come January, and usually I always say, they say, "Where's Sarah? Where's Sarah?" I said, "Man, she's like the ostrich approach, man. She got that head buried in those books and with clients, and she's not going to come out till about end of June or July."
It's time to go on vacation.
When it's time to go on vacation. Absolutely. And I know this, every year has been getting bigger and bigger and bigger for you, Sarah. So I'm just grateful and just blessed that you're being blessed. So that says a lot about you.
Well,
So
thank you. Thank
why don't you tell the audience before we get started the name of your company and how they can get a hold of you before we get started? We'll do that a couple of times throughout this interview today. So I want them to know right away, which it's in the chat, but tell them if they're listening and they're not on a chat, how they can get a hold of you, please.
Sure. Pose Accounting Services. Our office is located in Decula, but we are virtual in every form, the way you can be. Because I've got clients all over the United States. People move and go, "Oh, do I have to get a new one?" I'm like, "No, not anymore. We can do everything virtually these days." So, I'm here to help everybody, small businesses, individuals. Our office number is 770-545-8841. My email is spoe@poe cpas.com. And if you've got any questions or any needs, we'd be glad to help you. We also have a newsletter that comes out once a week for different topics every week that has some good information on there. If you'd like to be added to that list, just let us know. We'd be glad to do that for you.
Absolutely. And your newsletters every week, Sarah, are very educational, informative, and they're on point. And, definitely for our audience and listeners, you definitely need to register for that and sign up for that because she gives you some great tips every single week, whether it be talking about, taxes are what you can do for your children, your grandchildren, investments, et cetera, et cetera, et cetera. It's not just, as a business entrepreneur, it's personally, it's professionally. So, and also nonprofit. And Sarah, you do work with nonprofits as well, correct?
Oh, yes, yes,
Yes,
yes.
absolutely. So this is a year you really need a tax professional. And why? Because of all the changes that are on the horizon. So when does e-file open up for business?
For business, it opens up on Wednesday, January 15th. So if you've got your business return ready, it can be filed on Wednesday. And get it in, get it done fast because it's going to be a crazy year.
Absolutely. And when does the e-file open for individuals?
On Monday, January the 27th. So a week and a half after that. The business, they have to go in there and update all the software and everything. And the business doesn't take as long as the individuals do to get everything updated. And we were blessed this year not to have too many changes in December. There's been many years where they've changed everything quite a bit in December, and that will cause it to go later. But we didn't have that many changes this year in December, so the software got updated a lot quicker this year.
So I understand there's new 1099-K rules taking effect and took effect in January of 2024, or is it
That is
2025?
correct. Yes.
All right.
So you if you at one point if you had a business like I have a business, and if you had over $20,000 US dollars in sales or 200 transactions, you got a 1099-K. Okay. It has changed to just 20. It has just changed to I lost my train of thought. $5,000. So now you'll get a 1099-K if you made $5,000. So you got to make sure you're not double plussing your income by entering that in your income out of your bank statement. So the 1099-K should be a guide to make sure that you've put all your income in, every penny of income. The IRS wants to see every penny of income in there when you report that. So just make sure that you do that. We had a lot of waffling around last year about all this, but it finally got stabilized. So, but make sure it's a 1099-K, not a 1099-M, not a 1099-NEC, a 1099-K. There's quite a few of those 1099s out there. So
Absolutely, Sarah. So since there's three of them right there, explain the difference and um, who needs to use what.
okay, so a 1099-K is like what a business gets, right? For the income that they've earned, that they've been processed through their credit card people, their bank, that sort of thing. A 1099 miscellaneous is what you get if you have certain types of income. If a 1099 NEC is if you are a subcontractor. That's what you get for your subcontractor income, right?
Right,
It used to be 1099 miscellaneous, but
right.
they have segregated those two. A lawyer, CPAs, they all get those 1099 in NECs.
NECs. So like if you have, or like a business coach like myself, you have like subcontractors for team members, you have marketing people, you have IT people. They go on a 1099 NEC, correct?
Correct. That is
Uh,
correct.
Okay. And for a 1099 miscellaneous, who would get those?
They're not really used as much, more like real estate. Um,
Okay.
That's used more in the real estate arena now. It used to be used for everybody, but now it's more in the real estate arena.
I got you. So main thing is that if you have subcontractors, you want to do a 1099 NEC. And the big thing for you is also to make sure that you've got a 1099K as a business entrepreneur or self-employed
That is
or
correct. Yes.
with that.
And
Okay.
make sure you don't count that twice
Right.
because you don't want to
Absolutely.
pay double income taxes.
No, absolutely. So what is the status of the BOI, the beneficial ownership information? That's the
Well,
one that's been going back and forth.
yes, we are on hold again with that. 2 weeks ago, your deadline was January 13th, which was yesterday. Then a few days after that, it was put on hold. The circuit court in Texas keeps bringing it back up, right? So it's voluntary at this point. I've done so many of my clients now that if it does come back up, I'm not gonna have a big rush because we just took care of it anyway, right? I have some clients who didn't want to do it because they don't want to provide that information to the government, right? I tell them, you know what? They can get that information one way or another, right?
That's right.
It's easier just to give it to them and not fight it.
Well, and they
But
probably
everybody's
already have
different.
it.
You're
So,
right. If they've got your
so
banking information, they're gonna have this.
absolutely. So tell our audience and listeners exactly what is the beneficial ownership information? What is it and who was
So
supposed
it's
to sign up for it or who can sign up for it?
So if you are on the stock exchange, you don't have to do it, right? Because all that information is within the stock exchange,
Right.
right? The SEC. So they don't need you to put that into the FinCEN website that does all this. If you're a small business like I am, then you have to put that into the FinCEN site, which is called beneficial owner information. And basically, it's to help money laundering, right? It's to help prevent that. So you've got to enter your information in there so that they know who the beneficial owners are of every company. Of my company, it's just me. If you have a partnership, it could be who all your partners are. But it's just to give them that information. It's for regulatory updates. It's so that they know that. If any of that changes, like if you have corporate restructuring, you've got to let them know that corporate restructuring and why it's restructuring. And it's for compliance regulations to go back to the money laundering, right? But it gives them a way to know who, what, when, and where. A lot of this is already on the Secretary of State's website if you get a registered company through your Secretary of State. It's very similar to that detail.
So do nonprofits have to do this, Sarah?
Not at the moment. Not
Can
at the
they
moment.
can they volunteer and do it?
No, you don't need to
No.
at this point.
Okay.
No, no.
All right. So primarily this is for entrepreneurs,
For profit companies that are not registered on the Security and Exchange Commission.
right. So whether you're an LLC or any of those things and
LLCs.
any incorporated entrepreneur, you should go ahead and just do it because it's going to come to fruition sooner or later.
Yes, it's just arguing back and forth through the courts, right? Um, I don't think our newly elected president will have a say one way or another about this one. I don't think this is on his radar. I mean, right, there's a lot of things on his radar, but I don't believe this is one of them. So
Right.
I do believe that eventually they'll work it all out. And you'll need to do this. And if that
Absolutely.
happens, you'll have a shorter period of time to do it.
Exactly. That's why I say if you can, just go ahead and do it. The IRS already has all your information anyways. They can get it anytime they want to, and just be proactive. Take action.
It's not hard to do, or you can pay somebody like me to do it. I mean, it's not really hard. It's just getting that information together. And you've got like for my clients that I do it for, every year when they come in to do their taxes, do we have any changes to our BOI information? Because if we do, then I need to update that. That, if the stay hadn't have been put in order by the Texas Circuit Court, we would be processing fines today because it would have been due on Monday. And that's at one point it was $540 a day if you did not process your BOI information. And that could climb drastically quickly, and it's not worth it to have to pay that.
Absolutely. Any other key points about the BOI situation, Sarah?
Not at this point. Just, if you're unsure, text me, ask or email me, ask me, has this gone into effect? I've got my clients, I sent out quite a few emails about this, and it's so funny. I got an email from a client like 2 weeks ago. What's this BOI thing? And I wanted to say, really? I've only sent about 15 emails about this, and you don't know. But people just get in their own little world, right? Because I'm in this world, I understand it, right?
Right.
So
Absolutely. So, any marginal tax rates or anything that we need to talk about?
So basically, some of the things that change every year, your standard deduction, right? Those go up. But this could be our last year for a standard deduction, right? Because all the tax cuts from 18 could be changed. They could go back into effect. Everything could change the beginning of next year with that. So you need to be made aware of that. How is it going to change? When is it going to change? Who's it going to affect? Right now, we still have that standard deduction, and that's a nice little deduction. You're getting a nice little, like this year, it is
14.6?
yeah, yeah, there it is. For single filers, it's 14,600. For married couples, it's 21,900. Head of households is 29,200. So all that makes a big difference, right? That's a nice little chunk of change that you're not paying taxes on. Next year, all that will change. It'll go back to 7,000, 6,000, and all that'll change if none of those laws get changed, get passed. So we just don't know what they'll do. And we have a president who likes to change things up. We have a president coming in who likes to keep us on our toes.
Absolutely. And the other thing, talk about people, you talked about single and married. You also have people married filing separately, and usually you are better off to file jointly than separately. Is that not correct?
That is very true. But one case I would tell people not to do that. Let's just say you got married in the last year or so, right? And you owed absolutely nothing on your taxes, but the person you got married to has a back filing that they owe the IRS. If you file with that person, now you are legally responsible for all that back money. So you need to ask those questions before you sign on the dotted line with somebody else. Know where they're at. Know why they're not filing on time. There could be a lot of reasons, right?
Right,
I was married to a man who didn't like to do it. So eventually I just filed every year by myself. It was easier than having to worry about it, right?
right.
But you could have a lot of reasons. You could have a death in the family. There's not a one bad reason why it happens. You just need to know why it happens and how to prepare for it.
Let me ask you something. Is there an age that stops where you don't have to file, taxes like you're 80 or 90 years old, or do you always have to do taxes, Sarah?
So if you're receiving income from a pension, retirement, you need to file. If the only thing you're receiving is Social Security, they already know that information. You don't need to report that information to them again. But if you pay taxes with that Social Security, you need to file because you may get that tax money back, right?
Absolutely.
So you need to think about that. Now, if you've got just Social Security coming in and that's it, don't worry about it. But if you got a pension coming in, or you've got a 401k that you're getting some distributions from, or you've got some stocks that you get distributions from, yeah, then you need to report all that income.
You have to report it. Absolutely. That was a question that
Absolutely.
we had um, about with our mother passing, and said, why did my sister said, well, you shouldn't have to do that. But I said, yes, I do. And it's because of the stocks and things of that nature. So you do have to file. And so is there anything special you have to do if a parent passes on, for their last tax thing? Is there anything you have to do?
Yeah, so the 1040, which is what an individual files, you file that up to the day of their death, right? Because that's a living income. Anything after that goes either on a trust or an estate tax return. That's after the date of death. The things that happen after that. They could have a trust, they could have a estate, you could have distributions, you could have 401k distributions, you could have a home that you're selling and distributing income, or you can have 3 people go into and get a house, right? So all that is handled on that return after death, right? So
Right.
your deadline, your dividing line is the day of death, right?
Okay.
So that's how you know what goes on one return and what goes on a different return.
Turn.
And the executor typically handles all that. If they have to probate or they have to do all that, all that's usually handled by the executor. One thing I will tell you is if you've got a house, don't give it to your kids early, because then they don't get to step up in basis. Let's just say your mother passed away last year, right?
Yes.
For easy numbers, right? Let's just say she paid $150,000 for that house. If she passed that house on to you children before she died, your basis is only 150, what she paid for that house. If you get that house after she dies, you get the current value of that house as basis. And you want the basis to be higher because you want to pay less in capital gains tax. So if it was 150 and you sold that house for 600,000, you're paying on capital gains between the 150 and 600,000. Let's just say you got a appraisal on it and it was worth 550. You sell it for 600, you're only paying capital gains on $50,000.
Right.
That's a huge difference
Yes.
that's coming out of your pocket because with the money from the estate, basically. But yes, so you just need to think about all that when your parents are nearing their end. You need to talk to a lawyer or CPA and make sure all that stuff is handled properly.
Absolutely. Absolutely. So, we were also talking about some changes for tax season. I'm sorry to get off base there, but I felt like it was a good question. What about the AMT, the alternative minimum tax?
So that typically goes up every year. Unfortunately, that goes up. That's a little extra tax. If you make over a certain amount of money, you have to pay more taxes, right? Alternative minimum taxes. It's just the way of the world, unfortunately, and that little thing's going to go up. Now, next year in 25, I mean in 26, everything's going to go up. Everything's going to go back to the tax rates they were before the Tax Job Act went into effect in 18. So all your tax rates are going to go up. All your AMT is going to go up. Every tax rate will go up if they do not carry forward some of these tax laws that we've had for the past few years. Now, with President Trump being in there, I think some of this will carry forward. I don't think it all will. I think some of it will change. The biggest thing I think that's going to change is something called SALT, right? That sales tax and real estate taxes. And basically, up north, their real estate taxes are much greater up north than they are down south, because that SALT tax deduction you get on a Schedule A is only $10,000. With New Jersey, some people's real estate taxes are over $10,000. So they have missed out on some of those deductions over the past few years. So I think that is going to be one thing that you're going to see it's going to be debated quite a bit. But I think to make it fair for everybody in the country, there's got to be some adjustments for that.
Absolutely. Absolutely. So what about the earned income tax credit, Sarah?
Well, right now it's higher than it was in 18, right? Right now it's not as high as it was during the pandemic, because during the pandemic they did give you a little bit more child tax credits, earned income tax credits. But right now for a child tax credit, it's $2,000 up to the age of 17, and then it's 500. All that should go back to just $1,000 in the next year or so, if these things are not pushed forward and carried forward. But right now is $2,000. The earned income credit is a little bit higher than that. I don't have the numbers here in front of me, but those change every year, just like the AMT changes every year, just like the standard rate changes every year, just like the tax brackets change every year. But during the Tax Job Acts, it didn't change as much. We were lucky during that time.
Okay, very good. What about the August rule and how can
Augusta rule. That's
oh,
my
excuse me.
spelling's not very good.
Okay, thank you.
Yeah, the Augusta rule. So Augusta rule is something for a business, right? So my business can rent out my home for up to 14 days, or I can rent out my home for up to 14 days, and I do not have to include that as income on my personal tax return. Okay. If a business rents out my home, they get the deduction for the things that for renting out my home. Let's just say they brought in food, they brought in different things. Maybe I'm having a board meeting or something like that. And, typically with a board meeting, you feed people, different things like that. I could have a retreat here at my house, right? All the expenses that my company would have to pay for that retreat would be a deduction for the company. But me, the income that I personally earned during those 14 days, I do not have to include that on my personal return. And 14 days is a nice little thing. And it all started with Augusta National.
That's what I thought. I have friends that rent their home out in Augusta.
Right. And you can rent it up to, because of the tournament there, 14 days is where that rule came up. And that's a nice little thing to have. So these people are renting out their homes. Some of these are on the golf course. They're probably getting a nice little penny for that for 14 days. They're not having to include that in their income tax. That's nice.
That is nice. Absolutely. So speaking of home deductions, anything that you want to share about home deductions for our audience and listeners?
So a home deduction is like for your small entrepreneurs, your Schedule C, your real estate people, that type of thing, where you have a business, you run a business out of your home, right? I have an office out of my home, and I have an office at my office, right? Because unfortunately, when I'm at the office, I don't get my business stuff taken care of. Like today, I was worried about raises. I'm trying to make sure all my employee files are updated for the beginning of the year. Doing that kind of stuff at the office is crazy. It's hard. People in and out, that's very private information. So I typically do all that kind of stuff at home, right? So I get a home office deduction because I have a business. Now, if you're a W-2 employee, unfortunately, you don't get that home office deduction. So that's where you need your business that you work for to have an accountability plan so that you can take some deductions that way. So that you could take your internet, your printing, because so many people are working from home now, but they're W-2 and they're not getting to include that as a deduction. So an accountability plan is where that comes into effect. But that's a whole different topic right there. But because I have a business here, I do all my actual expenses. I take the square footage of my house, I take the square footage of my office, and I get that percentage. Let's just say it's 12.5%. So I take 12.5% of all the expenses of my house, my security, my lawn, the lawn guy that was just here today. We're going over stuff, things that need to be done for the year in the yard. I'm looking at my trash cans in the driveway that need to go be picked up, all that stuff. I get 12.5% of all that, the water, the power, internet. Um, so that can add up over time, or you can just take a standard deduction for that, which is up to $1,500, depending on the square footage of your house. But just like with anything, a lot of times, if you're willing to put in the work, sometimes you can get a bigger deduction.
Absolutely. So let me ask you this: how is AI affecting tax returns at the IRS? I mean, everything I'm seeing is just AI, AI, AI.
So a lot of that, I tell my S corps, right? That an S corp with the IRS, they're supposed to have payroll, because when they start having an S corp, they're no longer paying self-employment taxes, right?
Right.
So the IRS wants to get some taxes one way or the other, right? But if you have an S corp and you have payroll, you're deducting that income, those payroll taxes on your personal return. Okay. Well, when you file that S corp, AI can now look, they know what line that owner's payroll should be on. So it is now so much easier for the IRS to say, AI, we want you to look at every single line that payroll should be on to verify that that S corp owner is paying themselves a payroll. If they're not paying themselves a payroll, let's send them a letter and find out why and get some penalties and interest out of them.
Hmm.
So that's how that kind of AI, that's how AI is going to come into effect. AI is going to start looking at Schedule Cs to make sure you're providing all the information they want on there. It's just another way without a human having to look at every single line. AI is going to be your first line of defense to see these things. And I'm just trying to convince all my S corp owners that you need to have a reasonable salary. What's reasonable? That's a whole nother process, right?
Right.
There's things out there that you can do research on that can tell you what those reasonable salaries are. For a beginning business, I tell them, what is your monthly nut? How much money you need to provide for your household? That's what, when you're first starting out, that's what I tell my S corp owners to have. If you need $5,000 every month to live on, so that you can prove to the IRS that your company's not paying those expenses, that's what your payroll should start out. Because in the beginning, you're not making as much money. 2 or 3 years down the road, you need to make sure you're following that reasonable salary.
Exactly. Exactly. So, when preparing taxes for 2024, what is the TCJA tax?
So that is what's in effect right now, right? In 18, that's what got passed by President Trump the first time he was in office. That's where that SALT comes in. That's where those new standard deductions came in. Um, that's where some of the higher child tax credits came in. All that goes away after this year if they do not um, discuss them, bring them forward, they can make those come into effect. They can roll them forward. They can make them lasting. There's so many things that they can do right there with that. But if they do not, next year will be crazy, because then
Absolutely.
we're going to revert back to 18.
Absolutely. So a couple other things, I'm going to change this up a little bit,
Okay.
is that we're already almost, today's what, the 14th of January. Okay. What do we have to do in the month of January, like 1099s? What's the due date for those?
So I have to have all my 1099s and W-2s out by January 31st to you, either by mail or by email. Now, if you want it right away, you make sure that the people who are providing you those documents have your email address, right?
Right.
Um, because you can have it instantaneously. An ADP, those type of people have a portal, right? That
Right.
they put those documents in that you can get those. Smaller businesses don't necessarily have that. So, and all those forms have to be e-filed to the Social Security Department now by that last day. Well, Sometimes it'll take 2 or 3 extra days if that last day gets busy, but the Social Security is not going to penalize you for that. You're
Right.
e-filing a couple days afterwards. But you need to have that information out. You need to make sure that your employer has your right address, your right email addresses, because if they don't, and they can prove that that was sent to you, it falls back on you for not receiving it because that information was not provided to your employer in the way of a W-2 or 1099.
Okay, so Sarah, so as business entrepreneurs, people that do 1099s, let's say 1099s, do they need to redo and re-sign a 1099 every year for retention, for their retention employees or contractors?
Um, I have them reevaluated every year. I have my subcontractors look at it every year. Is this information still correct? And I have them sign off on that instead of filling out a brand new one, right? I have to fill out one for my people because I'm a CPA, I'm an accountant, right? So
Right.
I get those informations, those 1099s because of that. I don't want to have to fill out a brand new one for everybody. So I just say, yes, that information is correct. We sign off on it, we move forward, right? I'm
Right.
trying to save you time by doing that. Um,
The point
Everybody's
is,
different
yeah,
in
the
that.
point is that you need to have that conversation with your people before
Yes,
you send out those 1099s.
right. If you
Whether,
don't have that conversation, there's no telling when and where you're going to get that information from.
yeah, because you could have an employee that moved and didn't update their information where they moved to.
Yes. And if you
And
don't
it,
put return addresses on things, you may not get it back.
exactly, exactly.
And we
And
know
so
how the mail's doing these days is not
it's
always our best friend there.
no, it's not. It's not our best friend at all. That's for sure. So let's see, we were talking about the 1099s, the W-2s. They got to be out by the 31st. And you can e-file it, or you can email it to them, you can mail it to them. You want to make sure all that stuff is correct, the dates and everything. Also for nonprofits, what about board meetings? What if they didn't have a board meeting by the
You
end
should
of
have had
December?
that board meeting already. If you haven't had that board meeting, um, then you need to be doing that. I mean, you need at this point, I would say you need to do your beginning of the year board meeting, right? If you have
Right,
not,
exactly.
um, you know, our nonprofit, we're doing one at the beginning of the year. We had one at the end of the year, right?
Yes,
But
yes,
you need to know where you're going and where you came from. Those are all good things to know and how you're planning things going forward, right?
right.
Um, but if you don't have those meetings, how do you know?
Absolutely. And also, there's forms that are due in March every year for nonprofits. Is that correct?
That is correct.
And
Yes.
also for corporations. Do they not
So
have?
the nonprofit tax return is due in May. Okay.
Okay,
So S Corp and partnerships are due in March.
March.
Corporation and personals are done in April, and nonprofits are done in May. So there's a gradual step down to that, right? I will be concentrating on first my S Corps and partnerships. Then come March 15th, I'm going to switch to my personal returns, right? Then come April 15th, I switch to my nonprofits, right?
Right,
Because then all those have got to be out. But it's a process. And if you don't get your work into those processes, you go to the end of the line. And that's where you can get penalties for not paying enough estimated taxes or paying 110% of what was due the previous year. I mean, I don't know how many times people say, just file me extension. The money's not due then. Yes, it is.
yes, it
The
is.
money is due at April 15th. You either pay 90% of your estimated or you pay 110% of your previous year what was owed. 9 times out of 10, 110% is easier to figure out at that point because you don't have all your numbers or you would have already done your tax return,
Right.
right?
So I
So
guess
I always tell people that.
I guess also what I was referring to is just reminding our audience and our listeners about registrations. Like, do you not have to
Secretary of
register
State registration.
registration?
Your
Registration.
Right. You then, my little township, my town, I have to have a registration for that by April 1st. Unfortunately, so much of that is all due at the same time. Your secretary of registration in Georgia is due April 1st. Your business license is due April 1st. Just then your tax returns due April 15th. The sooner you get this stuff moving, you're not backed up from one tax dead to one deadline to the next deadline to the next deadline.
Next,
And if you
absolutely.
come to me on April 1st and need a tax return done April 15th, it's not going to happen. There's not enough time to get it done. That's why my first deadline is February, February to March 1st, then March 15th, then April 15th, because I need time to work it. Now, I do have people that have pages and pages and pages and pages of stocks. Their stocks, right? They've got great finance people that are making them money hands over fist, but they got 506 pages of stocks that they've got to do. You know what I tell those clients? I'll put the totals in so that we know how much you owe, but then I'll go in and put all those individual, because the IRS wants to see each individual line, right? So I'll go in there and do that in June, but I can give you a number for April 15th because I'm just going to put in totals so that I know long-term, short-term, all that kind of stuff, right? So they know a dollar amount that they can pay by April 15th.
Absolutely. And we live in a digital world. So, a couple of things. So, whether you're a W-2 person, usually you can go in through corporate, if you work for a corporation and download some of that stuff as well as they mail it to you.
Absolutely.
Same thing with your 401ks or like Fidelity Investments or any of those companies. You could go in there and download those, but they usually mail them out and they're trickling in January. And sometimes people forget what all they're supposed to be getting and they think they have everything and then they're going to run off to the CPA, but they have forgotten that, oh, there's two, three more things, right?
Yeah, that's why I always do a comparison year over year. Hey, last year we had this, but I don't see that. Oh, yeah, I'm glad you reminded me, you know. And if you don't hand deliver your documents now, do not email them to anybody. Please do not email them. Hackers are out there and they would just love to have that information. We have a portal called TaxStone, and all of our clients can upload all their documents there. I have my copy, they have the originals, and it's encrypted, and there's a lot less chance of that being stolen.
Absolutely. I mean that's so critical. And also like CPA offices, and I don't know about accountants or bookkeepers because we use CPAs. They also have like an organizational thing. They can email you of what to do, what to bring. Is that correct, Sarah? I know you have
Yes, and
one.
that is very true. In ours, in TaxStone, we'll have an organizer. And if you fill that out, it tells you where to attach the different documents. It gives me all the pertinent information. I can print that out and I've got everything right there I need, because every year you could have a new child born. You could have a death in the family. You bought a new house, you have a change of address. That organizer tells us all that pertinent information. If you got a new child, I need the Social Security card. If you had a death, I need a copy of the death certificate. If you got divorced, I need a copy of your divorce decree. If there's child custody, I need copies of that, because the IRS wants us to follow that to the best of our ability for all that. And that just does the due diligence for us to prove to the IRS that we did our jobs.
Absolutely, Sarah. So the other thing is you need to revow all your insurance needs.
Yes, I did that the end of last year. That was not fun, but it was a good practice for me because it'd been a couple of years since I'd done that. Um, but yeah, it was eye-opening for me. Have you seen those commercials? I think it's one of those apps where, do you know how many subscriptions you have?
Rocket,
Right?
rocket, yeah.
Yeah, I think I need to go look at that. I was like, oh my goodness,
Goodness.
I've got that many subscriptions. I, I was flabbergasted at how many I had. I went there and cleaned all those up. So now I keep, now I have a list, and on my Apple, I keep them all there now so that I can see them and I'm not having to go through an app to do that, right?
Right.
But not everybody's organized enough to do that. I have the right detailed organization mind to do that, but that app's great for that, right? I just don't want to rely on that app again for that. I don't want it to get that out of control again, basically.
Well, absolutely. And just also like reevaluating your insurance needs, having a conversation with your insurance people.
Yes, even if they're next door like mine is, I just walk out my door and walk in their door. You know, I'm like, really? But it was that easy, and I didn't do it for 2 years, right? And no fault but anybody mine. You reevaluate your health insurance every year. You need to do the same with your life insurance, your car insurance, your liability insurance, your E&O insurance. If you've got a nonprofit, your board insurance, all of
Insurance.
that, you know?
Absolutely. Your homeowner insurance. I mean, and God knows we need to lift California in our prayers and thoughts with
Absolutely.
everything they have going on, especially also North Carolina where they had the hurricane, that went through there. So many people didn't have the proper insurance to cover those catastrophes.
No,
And
I
and
mean, if I'd have been in North Carolina, I wouldn't have had flood insurance. Who would have ever thought that they were going to get destroyed by a flood?
exactly. Exactly. And a lot of people in California didn't have fire insurance.
Right,
They
because it
they
just got so expensive.
exactly. And it's just like Florida, people that have the hurricane insurance and stuff like that. So you definitely want to have, go have that meeting. If you haven't done it by the end of the year, last year, go do it at the beginning. Like you say, have a meeting at the beginning of the year. You maybe can cut some money down on however where your insurance is at for your automobiles. Maybe you've raised that thing to 1 million with $1 million umbrella, or maybe you're just doing the bare minimum. If you're doing the bare minimum, you definitely need to go have a conversation with the insurance person and you need to up that because the bare minimum isn't going to cover anything if you're in an accident. I can tell you that right now.
And also on Facebook, there's a list going around. If you ever have to evacuate, the things that you should take with you, right?
Yes, yes,
I've seen it like 6 or 7 times, right? But that's a perfect list to have for whatever, you know, have those things in a central location, a safe, a firebox, a safe at the bank. Have all those things in one location so that if you do have to leave, you're just picking up a file box or something along those lines, so you can get out of there and be safe.
absolutely. Because so many of those people, they have no information of, you know, who they are, birth certificates, or wills, insurance, none of that stuff. I mean, they couldn't even begin to know what they're
No,
doing.
and
So,
we all
so
have these cameras now with videos on there. You need to be going through every room of your house, taking videos of your product, of your jewelry, of anything of value, so that you've got proof of it.
absolutely, and another thing, sir, is that, so many people keep pertinent information at their home. And we've got this thing that's been going around. You see it a lot in Georgia, but it's been everywhere where people are stealing other people's homes, because they have found out information about, your address or whatever, your house is paid for. They've gone and deeded the property to somebody else or whatever. I mean, don't leave that stuff laying around. We have a lot of burglaries. We have a lot of stuff. We have a lot of people that break in. I mean, don't do that.
Get you a lockbox, hide it, put it under that mattress, that's not actual, but you know what I mean? Hide
Yeah,
that stuff. Yeah.
absolutely. So the other thing is, have you had your year-end tax meeting with your tax professional? If you haven't, you need to do that. And anything pertinent that you would give to our listeners if they haven't had that meeting, what they need to do right now.
So you need to make sure all your ducks in a row, right? You need to make sure that you've made sure that all your addresses are correct. You may need to reevaluate your W-2 deductions. Maybe you need to fill out a new G4, W-4, those type of papers, because maybe you've had a new baby or your kids are aging out. You're not going to have as many deductions as you used to. So those type of things you need to do immediately. You need, and when you're looking at your insurance, what about an HSA? That's a tax deduction right there,
Right.
that you can get. And I
Well,
know I'm
for
kind of all over the place, but I just thought about it when we
no,
were.
no, I was going to ask you that question for our audience and listeners. What is a HSA?
So an HSA is something that your employer or you take that money out of your paycheck. It's non-taxable. And if you use that money for medical, it won't be taxed, right? And if it's an HSA, it can roll over. Then you can invest that money, keep that lump sum money so that when you turn 70, you've got a piggy bank for your medical, right?
Right,
So
right,
then when you're 75 and you've got a medical emergency, you've got some money. You're not having to take money out of your 401k, that type of thing to pay for this. And it's a non-taxable event, right?
right, right.
So when it came out of your paycheck, you weren't taxed on it. And then when you used it, you're not taxed on it. Now, if you do an FSA, that is totally different. This is
Right.
an HSA.
Absolutely. And also, what about putting your money into the retirement and stuff like that?
So yeah, if you haven't reevaluated that, now's a great time to do that. Most companies have you reevaluate that every year. Um, I used to, when I was in corporate America, I made sure that my 401k was maxed out through September, right?
Right.
So
Yep.
January through September, I maxed out my 401k. Then October, November, and December, I took that money and put it into a separate account. That was my vacation money, my go have fun money. I'm having a really bad day money, that I would use for those type of things, right?
Right.
I want to go on a trip. I've got a stash over here that I've already paid, I've already taken, and I can go do that with. But that was
Absolutely.
how I did it for me. It was People used to do Christmas funds. They don't do Christmas funds anymore. So I just made my own Christmas fund and called it fun money.
Fun money. Absolutely. My grandmother used to have that at the bank where she'd put every payday, she'd go put the money in her Christmas
That's right.
fund. And I just remember they have a little envelope they'd give you and everything.
Yeah, and you usually got that money like the week before Thanksgiving, so you could go
Yep.
shopping on Good
Go
Friday.
exactly.
I mean,
So
Black Friday, not Good
yeah,
Friday.
exactly. So, Sarah, we got about 2 minutes. Let's tell our audience and listeners one last thing that you want to remind them of and how they can get a hold of you. If I'm sure you'll give them a complimentary call or meeting
Oh,
or something.
absolutely. Yes.
So,
Yes.
please tell our audience.
So Sarah Poe with Poe's Accounting Services. Our number is 770-545-8841. My email is spoe@poecpas.com. And if you go to a tax professional, always remember to bring the previous year's income tax return. So we have a guide to go by to make sure that you're not missing anything, right?
Right.
It just helps us and it helps you to make sure we don't miss out anything. If you've got an older family member, get a transcript from the IRS so that you know you're not missing anything if you're doing their taxes.
Absolutely. Thank you very much, Sarah. I'm Celeste Giordano with CelesteGiordano.com, your show host, and I want to thank Penny Rogers, our WCEG Network, for this great hour. Very informative and educational, Sarah. This was a wealth of information, and you can go back and you can watch us on Roku. You can go to Apple TV. We're live stream on Facebook. We're on Instagram. We're on LinkedIn. You can listen to this back because there's a wealth of knowledge here. And again, take Sarah up and have a conversation with her. And let's be proactive in everything that we need to do in 2025. And let's make this our best year yet. Thank you very much, Sarah. And thank you,